Alright, checking out this setup here on the 15-minute. London swept Asia's low and created this setup here. Alright, so price ran down. There was a wick to the left on the 15-minute, big wick. Price came down and made a upturn. Right here is the close of the second candle, well, the open of the third candle. So now I'm waiting for a order block to be created and traded above. And that happens right here. Okay, all of these here, this is a gap up and came down and closed underneath. So I'm looking at this candle right here. I want to close above it, and the first close I get, and this is right with it, is here. That's the entry, and the stop loss is below the low of that 3 candle pattern, the low, and then I just target it for the work here. This was a 1 to 3. Almost 3.5. Stop loss would have been 8 handles, and take profit would have been 27 handles, and would have been done in 1 hour, 54 minutes 15 seconds by the time I got to it. So there goes Asia. Let's go to the 15. So this is what we're looking at. This is looking like an accumulation, and then accumulation, and then manipulation here. Takes this low out, run to the top, took that high out. So if this is the beginning of a week that is going to be going long, today is Tuesday, tomorrow's Wednesday. So, so this drop, so we see here that during London, price dropped down into this big wick, and grading this wick, you can see, so we see the price came down to the 50% here. And repelled off. 50% is a good spot to see that. No bodies are at the 50. Just spiked it and start to rise. And we can always anticipate coming into at least the bottom quarter. The one you see here, the one deviation is within that first quarter of the Asian range, where price can turn around and drop. Price eventually did go higher and went up to the final quarter, and it turned around and then eventually dropped down in New York. So New York comes and sweeps London low, and it's for London low and previous New Yorks, making this the low of the week today, Tuesday. So price then does it again over here, and this is about 9. Also looking at the time that this happened, 1:30. So 30 is a place where price can turn around at. And we come over here and we see again, 8:30. We take it. So 8:30 made the sweep, and now I can turn around, and right here's another spot where 9:15. We see that price just took at 8:30. Price just snatched liquidity from multiple This here was taken here. You see it just took a lot out. And then so this candle here is a candle that could have been capitalized on. It's right up against this new week opening gap. You also see that the 50% also spiking, just like the 50% of this wick was only spiking. The buyers wasn't closing at it. That's a strong signal, strength. You know, since it's down, strength. If it's up, it would be weakness. So here we have the bodies are not closing there, and then we have price make this run up. So doing the same thing. Okay, so this is the 15, and the entry was on the 15 second, 50 minute to the 15 second. So I'm just going to do the same thing over here. Not sure if I would say, oh, I'm going to wait till 8:30 news and stuff like that. I mean, this was a beautiful play here, how it ran down. And it's possible that 8:30 had news. I'm not going to go take a look at it, but 8:30 news, you would treat that 8:30 as though it's 9:30 and act accordingly. So, it was 8:30 and it made the move down. So right here, I have the, let's now see how this would have played out. It's apparent that I could have gotten one, obviously gotten one deviation, of course. Let's just see how it would have played out here. See if we can record it and see if we could have had a good risk to reward. So now I'm going to go back down to 15 seconds. Okay, so that's the third candle. Okay, so this is the open of the third candle, and I will be waiting for a down close to be closed above. So that's there. Let's see if so I like to just check and see if I would have how I would have treated it. Okay, so price did drop down to that upper quarter, and when there's strength and speed and volatility, a lot of times we can get a just price coming just to the first quarter and then run it out of there. So looking at all of this here, this is slanted here, we have all of this here. I would have probably been okay with taking it. So, but again, all the way up here, that stop loss would have been pretty big. So yeah, all the way up here. So so price open here, and right there you gotta close. Let's see, where's that close at? Looks like it did it. Okay, so the close is 27.75. 27.75, and the high is 27.75. So that's not it. This is the first close up here above that, so that would be up here. And okay, so that would have been all the way up here. So I very much doubt I would have accepted a stop loss that big, which is one of my problems, being stopped out so much and didn't go in my direction. But that would have been an entry here. That would have been once this closed. So it gapped up So would I have been able to catch it when it dropped down? I think so. Hold shift, and this stop loss would have been a whopping 20. That stop loss would have been a whopping 20. I went down. Yeah, I did. Alright, we're going to change this into a. I'm going to change this into standard deviation one. Price never gave a discount, just started running. So, next I'm going to grab the long. And I'm just going to put it here. There, and then yeah, this wouldn't have yeah, 1-to-1 wouldn't have been nice. That would have been a 1.5. And let's see. Oh, we had more of this here. The other thing that I like to go for often is the 2.5 here. So now let's just see what would have happened if once it hit 1, if I brought it to break even, and we can see clearly that I would have been able to go for the 2.5 once it, grab this. Okay, and the entry, yeah, once one standard deviation was hit during open, yeah, during open, more than likely I would have brought my stop loss to break even here, and then I would have risked getting knocked out, didn't go my direction, but more than likely, I'm trying to just leave it and just accept what's up. So, but not open though. So anyway, in this instance, it didn't drop down and then run. It just ran straight away, and that would have given me a nearly 3-to-1, maybe 1-to-3. 2.5 would have been up here. Yeah, that's just where I would have went for, and that's also lined up right here with the upper quarter here, which is what I would think it could possibly run to there, and then fake out and drop down. So yeah, this would have been a spot that I would have definitely felt comfortable going to for price to run up into there, the final quarter of the regular trade RTH gap. So that would have been a nice successful trade. Even if I would have went just to 1, that would have been a successful trade. But it wouldn't have been much of a, ratio. Alright, so that's it. And each price point is what, the 15. Oh, let me see. Right, I'm supposed to mark out. Okay, that's that. How many? Well, let me say it there. That would have been 58. Yeah, so that would have been, that would have been 20 stops. I don't need this. Oh man, I deleted the wrong thing. What's that? Control Z. Got it back. Okay, I'll get rid of you. Anyway, yeah, 20. So stop at 20 and it'll take profit of 58. Yeah. Wondering if I would have just said, oh, it's gonna go up to the 12. It'll peak up, hit the 12 midnight. If I would have did that, then it would have been 60. But yeah, if I had time, I mean, this is 15 seconds, so I wouldn't have. I don't think I would have had time unless I seen it over on the other chart and recognized that this was here, the midnight open. So price run back to midnight bank. All right, delay the time. I wanted to mark that out. Okay, that would have been here. And then it gapped down, right? So that would have been there. And profit would have occurred at that open. I wonder if I'm supposed to put the next one because that shows it. Yeah, that's how I should do. Alright, 14 minutes and 30 seconds. I want to take profit in 14 minutes. Alright, so yeah, so that's that.